Dear investors, dear ladies and gentlemen, on behalf of Bellevue Asset Management, I would like to welcome you to today's update call on BB Entrepreneur Switzerland. My name is Sandro Tiziani and I will be your host during the call. It can probably be said somewhat provocatively that Swiss SMEs have withstood the corona crisis. The broad index is now trading in positive territory compared with the start of the year. Nevertheless, the BB Entrepreneur Switzerland Fund has performed far more favorably. At plus 13%, the strategy outperformed its benchmark by more than 11% in 2020. Is this simply due to the focus on quality, cash flows, and successful business models, or is there even a secret recipe? I am happy to welcome Birgitte Olsen, lead portfolio manager of the BB Entrepreneur Switzerland Fund. In the following minutes, she will speak about the current performance and the different phases of the year. She will also show why active management is the key to success in such phases and why we are positive about Swiss small and mid caps. Birgitte?
Thank you, Sandro, for this charming introduction. I'm happy to update you on the performance of the BB Entrepreneur Switzerland. Today, I have two big themes. One is the performance and the other one is the positioning for future performance. If I start with looking back through the year, you see, as Sandro alluded to, that's the BB Entrepreneur Switzerland with a performance of 13%, greatly generated alpha in comparison to the SPI. If I slice the year in four different phases, we have the first phase till mid-March, the shock phase, the COVID-19 phase. The fund lost 24% and lost 320 basis points more than the benchmark. In the second phase, the V-shaped recovery, the fund from mid-March till end of June was up 32%, which was 870 basis points more than the SPI. And in the third phase, which was like the range-bound trading phase, the swoosh recovery from end of June till end of October, the fund was plus 2%, which was 560 basis points better than the SPI. Actually, we are in the fourth phase of this development. We are in the phase where market starts to discount a post-COVID environment with the arrival of several vaccines to help us gain against the corona. So in this phase, markets rebounded strongly. The fund was plus 11%, which was 240 basis points more than the SPI. If I remind you the exposure of the fund, we do have a strong bias to small and mid caps. And as you can see, 29% of the fund is invested in target companies with a market cap below 2 billion Swiss francs. This is because our stock picking, very strong active stock picking style leads us to be complete benchmark agnostic, and we go for the best risk return we can find. But also structurally, our bias to and focus on family-owned companies, entrepreneurs, lead us to find a great population in the smaller cap environment. So the median of market cap of the fund is 3.4 billion, which makes it strongly skewed to small and mid caps. And I think it's a positive, it's been a positive this year, and it will continue to be positive in 2021. If I try to map the performance of small caps in Switzerland measured by the SPX compared to the SMI and Nestlé. And this is starting in March 2020. I realize the headline is wrong, but it's March 2020 to November 2020. You see a strong rebound. The SPA Extra is plus 45%, but that's normal because it lost more in the correction in the shock phase number 1. And also in the range-bound phase, June to October, the peaks was stronger by more or less 5% than the SMI. And now, of course, in the rebound, we see further outperformance of small and mid caps. We are at an interesting point. Then, if we look on the 5 years perspective, small and mid caps indices, and this is true not only for Switzerland but for Europe in general, are back to their February levels, whereas the broader indices are still 5 to 6% below. So technically, it's going to be interesting to see if we can pass through this phase. I think the requirements are positive. The prerequisites are positive. We see a strong fiscal monetary policies. We see a new political stability and the arrival of vaccines, which actually should change the attitude of companies which have been busy protecting their cash flows and liquidities, avoiding any unnecessary expense and investment, to a phase where they can start to plan with more security, to invest, which will help to create jobs, to help consumption, and at the end to see higher GDP growth. So it is quite it is not impossible, and it is quite as many strategists have now announced, which have changed a bit their views on values and cyclicals to be more positive. And we think that in an environment where we have an extreme dichotomy in the valuation of value versus growth, the biggest ever since I've been in the business anyhow, that we could see some further catch up of value versus growth, and some further performance of small caps, which also are geared to value. Those geared to value, sorry. In the Lipper rankings, the fund is doing well from a year-to-date and 12 months perspective. This aligns us back to the levels or to the levels of alpha we generated on the long term, if you look at 5, 10 years and since inception of the fund. And since 2006, where the fund was released, the annualized return has been 6.7%, which is a bit and quite a bit more than the 4.5% generated by the SPI through many crises, 2008, 2011, and now 2018 and COVID. Now, how are we positioned? And to remind you, a strong characteristic, which is a structural bias of the fund as well, due to our focus on entrepreneurs and family-owned companies. We run portfolios with companies which have a very low level of debt and high profitability, which make them very resistant to any crisis, and in the way they can continue to work on the strategy of innovation, and strong companies can be even stronger after the crisis. And we certainly would expect from these to be better positioned than the less well capitalized companies after the crisis, so that it can grow stronger, gain market shares, and generate higher earnings and cash flow returns for us. Innovation is an important issue and an important driver of performance for those companies. They invest in R&D to a broader extent than their peers. And it is important, especially for those Swiss companies who still have a big chunk of their cost in a very strong Swiss franc, to be able to have pricing power to generate higher market shares, more growth in the top line, and at the end, more cash flow and earnings, and a good payback on this R&D investments. Now, what have we done in the first different phases of this year? I think we have been able to be very active and to position the fund in a very attractive way in each phase of this year. I think the name of the game is really, you have to work on your watch list. You have to anticipate the next step. And if you're not ready with your and have done your homework with a list of potential winners, by the time the market is there, it's too late. And then you, like in November, if you have not decided on which value stocks to be invested in, and we did so from August on, you then are a bit astonished by the strong reaction of the market, and then you can easily miss 30, 40, 50% of performance if you look at stocks like Sulzer, Burkhardt, and so on. Now, something which is now dear to us is ESG. As you know, Bellevue has started to work with the MSCI database, and I'll explain how we use it to gain traction and to generate alpha for the BB Entrepreneur Switzerland. New ideas that have been added in the past 6 months, more value, a bit less growth. If growth, then growth at a reasonable price. You see, and I would like to speak a little bit more about Burkhardt compression, which I found really interesting. I see two catalysts for Burkhardt. You know, Burkhardt historically has been very strong correlated with the oil price, which serves us well now in the short term, since after the arrival of the vaccines, the oil price is rebounding and Burkhardt is rebounding too. I think it's a wrong correlation, so it's strong for the wrong reasons. And compressors are not only used in the oil industry, but also in the gas and also in the hydrogen industry. And I think the hydrogen industry will be a great market for Burkhardt in the mid to long term. As we know, the production of hydrogen is expected to increase tenfold until 2030. And you need to liquefy this product so it can be transported, stored, and Burkhardt is in this business. It's one of 4 OEM producing compressors with excellent reputation and products. And they already have signed the first contracts for hydrogen stations. And we expect that this business could become a third or 50% of their business in the next 3 to 10 years. So it's going to be a very positive trigger for Burkhardt. The second one is the ESG issue. So Burkhardt is ranked BBB by MSCI. By the way, Sulzer, for instance, is ranked AA. The new chairman of the board, Ton Büchner, who has a history with Sulzer and was also the CEO of AkzoNobel, has a strong agenda, a strong ESG agenda. And I think we can anticipate more communication and more transparency on ESG, and this will help the rating, and at the end it will also help the valuation of the company. So in anticipation, so I think we have a multi-trigger type of situation with Burkhardt compression, and it adds to the value mix of our fund. How are we today in terms of our weightings in tech and healthcare? As you may remember well, tech and healthcare were the 2 sectors which benefited the most in the COVID crisis. And with tech and industrials companies which are with a strong technological components like VAT or Huben+Suhner, this makes up 21% of the portfolio. It's been stable since the crisis. Actually, we are very convinced of the merits of Inficon and VAT, and we've had extensive talks with the management of Inficon. We expect the semi-industry to continue to be very supportive for the stock, and thanks to their design wins, we expect 2021 to be a very good year for Inficon. I think a second trigger will be the Capital Markets Day of VAT beginning of next month, where we certainly will hear some more positive noises from the VAT CEO regarding semis. Healthcare is a bit different. We have cut down the exposure from 21% to 12%. I think some of those stocks, although being great companies, are expensive, and I think the risk reward is higher somewhere else, especially for those who have a slight cyclical risk to them as well. So also we continues to be one of our preferred ones for 2021. We think that their platform in Germany will help them, and despite the tremendous performance of this year, we expect further positive news in 2021 for Zuhause. So these are the positions at the end of October. It has changed a little bit since. Inficon, a new top 10, but we also have more cyclical stocks that have emerged. So we are exposed today in our top 10 to Arbonia, and also Burkhardt has a higher weighting. We have shaved somewhat Logitech and also Zuhause on a tactical matter. And finally, a new slide, a ESG slide, to which is symbolic for the fact that we incorporate those criteria in our due diligence. And I think, like with everything, anticipation is the name of the game. Then MSCI is a database which has a big market share, but is far from perfect. We all know that they have constraints in their capacities, and companies often complain that it's a bit of a tick the box exercise, and it doesn't really reflect the full ESG spectrum of the company. So I think it's very good for us to try to anticipate what B, double B, triple B companies, or even not rated companies, how they can evolve over time. And I think higher ESG scores will command higher ratings. Then CEOs, CFOs, and the boards have understood that sustainability is not only something you discuss when you have 5 minutes left at the end of the meeting, but is something more structural and here to stay. So I would think that to know to incorporate this in a due diligence and use it actively for stock picking in preempting changes is a fantastic way for us to generate further alpha. With this, I'm at the end of our presentation, and I will leave the conclusion to Sandro.
Thank you very much for the interesting update, Birgitte. I can well imagine that this has confirmed our investors in their position and hopefully also highlighted opportunities. On behalf of Bellevue Asset Management, I would like to thank you very much for your trust, and should you have any questions, your personal contact will be happy to answer them. In this spirit, I'm wishing you a successful business day and stay healthy. Auf Wiedersehen.